Welcome to this tutorial today, brought to you by To The Tick, and today's topic is the bearish descending triangle. Now, descending triangles can be seen in two main areas within market structure: trend continuation, either bearish or bullish, and as a reversal. Today we're going to focus on recognizing the descending triangle itself, what does it look like, and then how to trade the bearish trend continuation setup. Now, this image represents a bearish descending triangle price pattern, and it's important to recognize that a price pattern in this case has two parts. It has a pole which defines your trend direction, and in this case the base is at the top, the tip is pointing down at the bottom. Therefore, it is in a bearish consideration. The second part is the actual triangle. It's considered a descending triangle, and it is attached to the pole. So part one is the pole, part two is the triangle. To have a continuation potential, you must see the pole. So we're going to use and look at something that's real world here, and we're going to start with the reference point, and we're going to look at what it would look like, more like traders do, instead of those perfect little images. And we're going to say the bears up here have been hitting their head on that line in the sand as support, and we need to see those bears give us a big move that finally gets the juice to get through that line. That's the very first thing that must happen. And if we get that and they do break that line, then they have to prove that they intend to hold it. The bulls can't do a thing about it, and then the bears come stomping down the hill. You are watching the formation of the pole. As a trader, you're going to watch the formation of the pole. Now, what you want in that breakdown is a surge in volume. You want to see a deeper, thrusting, harder action that creates that pole. You want to see the bears really step in both in volume and in their aggressiveness on price. That's what you want. That is what sets up your continuation pattern. I cannot stress it enough that the pole, and understanding what creates the pole and understanding what happens after the pole, is what sets up your continuation patterns. So again, our pole has been created. We have a base to a pole, we have the pole measurement itself, and we have the pole tip. The pole tip coincides with a swing low. We now have a swing low in price, a swing high in price with that a pull up, and a second swing low, second swing high. And basically what this message is with the swing low is that the decline had enough support in price at this level to stop that decline. It doesn't mean they're necessarily through. It just means there was enough people, maybe all they're doing is taking profits, but they stopped the decline in price. And that's what we want to see. Part two gives us a chance to possibly take a trade to join the party for what we hope will come next. So we're going to embrace the fact that they found a place here for support, and we're going to see what they do when they pull the prices back up. And with this information, we are now able to give us some defined terms of support in the immediate picture and also resistance in the immediate picture. And as our prices fill in this pattern, it's important for us to realize a couple of things. Number one, let's go back and look at our original structure. First of all, the pole is now finished. Part one is complete. We have the base that started our breakdown, we have the pole measurement, and we have the tip in a bearish consideration. So let's look more closely at part two. And hopefully the first thing you're going to notice is, whoa, wait a minute, that little blue triangle that we started with doesn't fit the image that I've now drawn. What's that about? It doesn't matter. They're going to be of different durations, these triangles. Triangles can be lengthy. In a continuation pattern, we want them to be fairly short in time. We want to see consolidation both in volume and price, while the bears literally all they're doing is taking a breather. They expended so much energy with that big breakdown, we want them now just to take a pause. So we watch the price action in here, weaving back and forth between our range-bound definitions of support and resistance, and the fact that your triangle won't exactly look the same all the time is okay. Does it follow the same structure? So what is that structure? Well, the horizontal line of support on the bottom okay? And the upper line of resistance is tilted towards or inclined towards that lower line of support. So those two lines are converging. That's what they call it. Converging simply means that the lines are inclined toward each other. Okay? Now what they're doing in this range-bound action is that they're squeezing prices. Prices are getting lower highs on the top and yet still holding that same line in the sand down here on that immediate support. While they're squeezing, there's a midline area in there inside that price action, and that midline is the measurement for the apex. It's where these two lines will eventually completely merge. So again, they will be different lengths, they will have slightly different shapes, but do they maintain the structure of a descending triangle? They manage a horizontal support line, and they are bringing the highs lower down to that line. Now, as traders, we're looking for what might come next, right? We have part one, the poll's finished. Now we're still working in part two, but while we're working during part two, we're looking for what this pattern might give us. And the cool thing about price patterns is that they give us some great objectives for what might come next. First measurement, more conservative, but the traditional way to trade these is to use the swing high in your triangle, highest high, swing high up there, and then we're going to use that swing low, and we take a measurement. You'll see it here in these gray dotted lines. We add that measurement to the breakdown line. Now that's the classic way to trade this pattern. A more aggressive thing, since we're looking for a trend continuation pattern, is to take the full measurement of our pole, our original pole. Take that full measurement of that price action and add it to our apex. Remember, the apex is representing the middle ground where there's a fight up there in that triangle between the bulls and the bears. And we're going to take from that apex and look for that pattern in that first move out of that pole to repeat. I said repeat, duplicate. Yes, I mean full repeat of the pattern. How cool is that? And the structure in the background is what's giving it to you. Now, aggressive traders are welcome to start taking short trades off the upper resistance line. The recommendation is wait for a swing or two to make sure that you got a solid line, adjustments accordingly. However, tight stop placement right above that orange line, that orange resistance. And wait for that little turn. Again, you might use a smaller chart, but use that midline that's creating your apex as a rule. If they come back through that midline, you're going to start approaching your support line, and if the momentum dies on you with that short, cover your trade, think about taking it again. While you're working the triangle, aggressive traders often can get several trades out of a good triangle. The point is the structure maintaining sound? And if it is, then you're still good to go with the trade. Again, more conservative traders will wait for the breakdown, and your definition of confirmation, I offer this on the website in the text. You've got several different ways to look at confirmation. One of the best ones is take out that first swing low. Take out that swing low price that created my pole tip. Now, it's also what created your support line. So take it out and make sure you can hold that breakdown just like we did up here, and then you're off and running. So let's go ahead and watch the pattern unfold and see what it might do. Oh, well, look at that. We got a little poke above that upper resistance line. I'll warn you right now, these cats do that a lot. Some markets more so than others, but pushing that last little push and then going nowhere oftentimes signals that they're ready then to go on with the pattern. Again, watch your volume. You did get the break on the line, and notice that you got the break and got a push, but they came right back inside again. But again, could they hold it? No. They could not get back above your apex. That means that the bears are totally in control of that line, and now everybody knows we're breaking down, and there's the rest of the party joining the group, and that's why we go ahead and turn a part one pole, part two triangle, beautiful bearish descending triangle price pattern into what's now a beautiful bearish continuation picture. How cool is that? So in summation, it's important that you understand that the bearish pole is the most important characteristic to the pattern. The deeper, stronger, tighter, more expansive volatility you get out of that thrusting action in there in the first place is exactly what you're looking for. You want to see them coming hard again with more volume, and you want thrust and volume and price on that pole. It is what sets up whether you have a continuation pattern or not. Often that volatility is duplicated, and that's what you're looking for. Part 2 of the pattern represents our pause in price action and in volume. We want this to be relatively brief, but as a triangle it could go on 5 or 6 swings. Structure. Maintain that descending structure, lower highs and equal lows. Then we squeeze to an apex and or a breakdown number. We're looking again for a push in volume and in price. We can target using our apex minus our pole value, because we're looking for short, right? Apex minus the pole value, and then the breakdown line or the apex, your measurement, swing high, swing low, inside your triangle. Now that completes today's tutorial, but I wanted you to know that on our website, tothetick.com, and I'll give you the address here in a second, I always have the videos parked with the text so that you have that to refer to, and or you're welcome to print it out. And then I offer you some real-world chart examples. This is a real nice example of a single day here where we got a nice pattern here that broke down out of the top, and you'll see everything marked the same way it was in my previous slides here for the video. The poles created, you get your support line, you get your resistance line, and everything unfolds exactly like what you're looking for. So come learn how to look at that volume. The next chart example I've offered you here of this pattern is a bigger one, and I try to do this occasionally just so you can see how the big pictures really set up patterns that keep coming, keep coming, keep coming, and they repeat, repeat, repeat. You get these larger patterns and then this smaller inside patterns. But once you get a nice big breakdown, this one started from a first effort on a brand new high. This was the failure for that first new high effort, and it started a big move down that kept coming until again they actually got a base of support. This entire market was in a screaming bull trend until this scenario, and look at how we got everything we got down here in volume. And again, I try to give you some notation so you can come and learn. So I won't go through it all now, but I would encourage you to come and visit us on our website, tothetick.com/edu. Come and subscribe. I've got lots of great things for you. And again, thank you. This has been your tutorial today, brought to you by To The Tick on the bearish descending triangle.